Okay, so we're looking at this analysis report, top 3 reasons I'm buying more MSTR today. It's a really aggressive, bullish take on MicroStrategy, basically saying that at around $164, it's a huge asymmetric buy.
It's a powerful thesis for sure. The conviction is definitely there. But when you make a case this strong, the structure has to be just as strong. Let's start with the engine of the whole argument, which is the leverage.
Right. So reason number 2 really hypes this up. It calls MSTR an evolutionary financial instrument, a Bitcoin accumulation engine. It says the company is using cheap debt, and that's led to, about $7.7 billion in net income TTM? It's all about that powerful leverage effect.
Okay, so building on that, what if we looked at that leverage not just as fuel, but maybe also as a fuse?
A fuse? I like that.
The analysis report needs to explicitly balance this leverage effect with a detailed look at the actual debt risk.
Yeah.
It talks all about the exponential upside, but it sort of it neglects to fully address how fragile that makes the company if Bitcoin goes down.
I see the weakness. The writer defines risk based on a technical level. In reason 1, they say defined risk is at $155.
But that's just a line on a chart, isn't it?
Exactly. It's a chart pattern, not a financial safety net.
Right. For an instrument this leveraged, the real risk isn't just a support line. It's the debt covenants, it's margin pressure,
The things that can force your hand.
Yes, and ignoring that stuff creates this logical gap. The risk seems to be limited by where the stock bounced last week, not by the real dangers on the balance sheet.
So the suggestion isn't just to, add a footnote about debt. It's about really baking it into the valuation.
That's it. Integrate a mandatory section, something that details the downside sensitivity. The report has to proactively talk about what happens with debt restructuring or asset impairment.
Turn that leverage argument into a real, balanced risk equation.
Exactly. It shows you understand the whole picture, not just the fun part.
But how do you do that without making the report, a super dry accounting doc? The whole point of this is that it's sharp and aggressive.
Fair point. We don't need a full audit. We just need a risk model. So instead of just saying, hey, look at the net income from BTC gains, actually model what happens to the balance sheet or the NAV if Bitcoin takes a big hit, say 30 or even 50%.
Oh, I see. So the concrete example is using the debt they have now to figure out the exact Bitcoin price where things start to break.
Yes.
That gives you a fundamental line in the sand, the point where a margin call could get triggered. And then you see if that new line supports or maybe totally undermines the $157 technical level.
You're merging the finance with the charting.
And that gives the whole defined risk idea so much more credibility.
Yeah, that intellectual honesty it's what separates a real analysis from just a speculative tip. If the chart says 157 but the debt says 140, that changes the whole story.
Completely. I think that addition alone would make the entire report stronger.
Okay, that's a great first point. Speaking of lines in the sand, let's talk about the value claim.
The fire sale? Yeah, the fire sale. The report uses that language, saying it's bouncing off that $157 to $160 support and promising 100 to 170% upside.
And I can see where you're going with this. It feels like the technicals and the fundamentals are living in two different worlds in this report.
They are. The analysis has to connect the net asset value, the NAV per share, directly to that technical price defense. That's the only way to really prove it's a fire sale.
Because right now the argument leans so heavily on that technical line in the sand at $157. But it never really connects it to what the company's assets are actually worth.
Exactly. That's the weakness.
The report says the price is 65% cheaper, but cheaper than what?
The 52-week high.
Right, the high. But that doesn't tell me if it's cheap based on its intrinsic value today.
So the reader is just left wondering, is $164 a real bargain compared to the NAV? Or is it just a random price point that could easily break lower?
If you're gonna shout Black Friday sale, you have to show me the original price tag. You have to show me the discount against the actual value.
So the suggestion is pretty simple then?
Very simple. The report needs to prove that the current stock price is way below the intrinsic value of MSTR's holdings. That's how you justify calling it a gift.
You have to ground the hype.
If you're going to use that kind of high-impact language, it's got to be based on assets, not just chart momentum.
So let's make that concrete. How do we do that? We just talked about merging finance and charting for risk. How do we do it here for the value part?
Let's get tactical. Use the company's Bitcoin holdings, it's all public info, and calculate an estimated current NAV per share.
Okay.
Don't just point to big numbers like net income. Do the math. Hard asset count minus the debt divided by the shares outstanding.
And once you have that NAV per share number, the thesis either proves itself or it doesn't.
Instantly, you put the $164.82 share price right next to your calculated NAV per share. And if it turns out MSTR is trading at a premium or even just at parity,
Then the Black Friday sale idea is it's just wrong.
it's challenged at the very least. And if that's the case, you might need to reframe the whole thing. Maybe it's not a value play anymore. Maybe it's a pure momentum and leverage play
Which is a totally different kind of investment.
with a totally different risk profile. The goal here is just truth in advertising for what is a very aggressive thesis.
That's a powerful point. Because if it's trading at NAV, you haven't found a fire sale. You've just found a fair price for a leveraged vehicle. And that completely changes the urgency of the report.
It really does. Okay, so moving from the floor to the ceiling, let's look at those price targets.
Ah, yes. The big numbers.
Reason number 3 is all about external validation. It cites analyst consensus, 90% buy. And these, breathtaking price targets, an average of $490, a high of $705.
And it uses that to say there's a massive disconnect and like a 327% upside.
But here's my question. Isn't that what people want to see? They want to know what the experts think, right? Especially if you're making a contrarian bet. Why is relying on that a bad thing?
That's a really important question. I think the issue is that leaning so heavily on external targets, it weakens the report's own analytical muscle. You're sort of borrowing someone else's conviction instead of building your own.
Okay.
It's fine to cite them, but they shouldn't be the anchor of your entire argument.
So the weakness is just stating those big numbers from Bernstein or TD Cowen, but not explaining any of the assumptions behind them? It turns the 705 target into just a number to hope for.
Exactly. It's an anchor for hope, not a substantiated projection. And what's more, the report doesn't even ask the most obvious question.
Which is?
Why is the market ignoring these targets? If the analysts are so smart, why is the stock 65% off its high? You have to address that paradox.
You really do. That's the heart of a contrarian thesis. So the suggestion isn't to remove the targets.
No, not at all. It's to pick one, say the highest one, that $705 figure, and actually reverse engineer it.
Figure out what would have to happen for that price to be real.
Yes, show the intellectual rigor. That's what gives the report its own independent conviction.
So how do you make that reverse engineering exercise concrete and, useful in a report like this?
Well, instead of just stating the 327% upside, you frame the discussion around the variables you'd need to hit $705.
Like the future price of Bitcoin.
For example, you can model that relationship. If today's price of $164 reflects the market thinking Bitcoin is worth, $45,000, what does Bitcoin's price need to be for MSTR to justify a $705 stock price? Is it $150,000? $200,000?
That's brilliant. It makes the target dynamic, not static. It tells the reader not just what could happen, but what must happen for that bull case to play out.
And it validates the target while also defining the conditions. It transfers the authority from those external analysts right back to the writer's own model.
That's it. And that shift in authority is what takes this from just a compelling read to a really expert piece of analysis.
This has been a really productive